everyone, this is SHOBHA Rani R. Today I am going to take up the topic numerical problems on reconciliation of cost and financial accounts. In the given problem, they've asked us to prepare a reconciliation statement. Net profit as per financial books is given rupees 31,890. Net profit as per costing books, it is rupees 33,380. Factory overheads under recovered in costing 2,850. Administration overheads over recovered in excess rupees 2,125. Depreciation charged in financial book rupees 1,830, whereas depreciation recovered in costing, it is given rupees 1,975. Interest received but not included in costing rupees 225. Income tax provided in financial books rupees 300. Bank interest credited in financial books rupees 115. Stores adjustment credited in financial books rupees 210. Depreciation on stock charged in financial accounts rupees 430. Dividend paid appropriated in financial accounts rupees 600. Loss due to theft provided in financial accounts rupees 130. Points to be remembered while preparing reconciliation of cost and financial accounts. In an organization, when expenses increases, profit it decreases. Then it has to be added to the cost book profits. In financial book, it has to be subtracted. When expenses decreases, the profit increases, then it has to be subtracted from cost book net profit, whereas in financial book, it has to be added. When income increases in organization, automatically the profit also increases, then in the cost book, it has to be subtracted, in financial book, it has to be added. When income decreases, the profit also decreases, then in the cost book it has to be added, in financial book it has to be subtracted. The first, we have to start with the profit as per cost book accounts. Then we have to segregate the items as incomes and expenses. The first item given in this problem is factory overheads under recovered in cost accounting. Factory overhead is an expenses and it is under recovered in costing by rupees 2,850. This will have the effect of increasing profit as per cost books. Thus, in order to reconcile this amount of rupees 2,850 should be deducted from the costing profit. In other words, expenses decreases, the profit increases, then it has to be subtracted from net profit as per cost books. The second item given here is administration overhead. Administration overhead is an expenses and it is over absorbed in cost books by rupees 2,125. This has the effect of decreasing costing profits by rupees 2,125. Then, in order to reconcile, rupees 2,125 should be added to the costing profit. In other words, expenses increases, the profit decreases, and it has to be added to the costing book net profit. The third item given here is the depreciation. Depreciation in cost accounts given rupees 1,975 and that in the financial account is given rupees 1,830. This has the effect of reducing profit by rupees 145 as compared to financial profit. Then in order to reconcile, rupees 145 will be added to costing profit. In other words, expenses increases, the profit decreases, then it has to be added to the costing book net profit. The fourth item, interest received is an income amounting rupees 225 is not recorded in cost accounts. This will have the effect of reducing profit as per cost books. Thus, in order to reconcile this amount of rupees 225 for interest should be added in costing profit. In simple words, simple income decreases, profit also decreases, then it has to be added to the costing book net profit. Next item, income tax provided in financial books. It is an expenses and not recorded in cost accounts. This has the effect of increasing costing profit as compared to financial profits. Then, in order to reconcile, rupees 300 will be deducted from costing profits. In other words, expenses decreases, the profit increases, and it has to be subtracted from cost book net profits. Bank interest credited in the financial books is an income and is not recorded in the cost books. This will have the effect of reducing profit as per cost books. Thus, in order to reconcile this amount of rupees 115 for interest should be added to the costing profit. In simple words, income decreases, profit also decreases, so it has to be added to the net profit as per costing book. The next item, the stores adjustment credited in financial books is an income and is not recorded in cost books. This will have the effect of reducing profit as per cost books. Thus, in order to reconcile this amount of rupees 210 should be added to the costing profit. In other words, income decreases, the profit also decreases, so it has to be added to the costing book profit. Depreciation on stock charged in financial accounts rupees 430 and is not recorded in cost books. This will have the effect of increasing profit as per cost books. Thus, in order to reconcile, this amount of rupees 430 should be deducted from costing profit. In simple words, expenses decreases, the profit increases, then it has to be subtracted from the costing book net profits. The next item, dividend paid rupees 600 is recorded only in financial accounts and not recorded in cost books. This will have the effect of increasing profit as per cost books. Thus, in order to reconcile, this amount of rupees 600 should be deducted from costing profit. In other words, expenses decreases, the profit increases. Hence, it has to be deducted from net profit of cost books. The next one, loss due to theft provided in financial account is rupees 130 is not recorded in cost books. This will have the effect of increasing profit as per cost books. Thus, in order to reconcile, this amount of rupees 130 should be deducted from costing profit. While solving or preparing this reconciliation statement, it's better start with profit as per cost accounts. So, as given in the problem, net profit as per costing books is 33,380. Add to this over absorption of administration overheads 2,125. Excess depreciation in cost accounts, the difference amount we have to take here 1,975 minus 1,830 will get the difference of 145 rupees. Interest received not included in cost account, it is given 225. It has to be added. Bank interest credited in financial books rupees 115. Stores adjustment credited in financial book is rupees 210. Altogether, the total amount comes 2820. It has to be added to the net profit as per costing books 33,380. The total amount comes 36,200. From this we have to deduct income tax provided in financial books rupees 300, depreciation on stock charged in financial accounts rupees 430, dividend paid in financial accounts rupees 600. Under recovery of financial overheads 2,850. Loss due to theft provided in financial accounts is 130 rupees. Altogether, the total comes 4,310. It has to be deducted from 36,200. The resultant figure will be 31,890, is known as profit as per financial accounts. The above treatment of items will be reversed when the starting point in the reconciliation statement is the profit as per financial accounts or loss as per cost accounts. Thank you.